There used to be a time when cryptocurrencies were only supported by few early investors and people who are into technology. But now the situation is quite different with more institutional adoption of cryptocurrencies. Does this mean that cryptocurrencies make more sense now than it did before? Well, let's talk about that. Welcome back to CryptoGeeks. In today's video, we'll be looking at the institutional adoption of cryptocurrencies. But before we get started, make sure to smash that subscribe button for your chance to win our monthly giveaway. Just comment down below, "I subbed," and you will be entered into the crypto giveaway. Check out our About to find out what this month's giveaway is. Let's get started. Until very recently, companies and other major investors stayed away from Bitcoin and other cryptocurrencies, and it seemed like these assets only got the attention of people who are actually into the technology behind the cryptocurrencies. If you look just 2 years back, you won't find any attention to cryptocurrencies from institutional investors. Some of the biggest names in finance used to refer to Bitcoin as a scam. However, all of those started to change in 2020 when the pandemic hit us unexpectedly. For instance, Microstrategy now holds more than 90,000 Bitcoins that could be worth billions of dollars, but this number could change because the prices keep on fluctuating. Blackrock, JP Morgan, Goldman Sachs, Deutsche Bank, Morgan Stanley, Henyep Group, Square, MassMutual, Harvard, and Yale are just a fraction of the growing list of traditional financial institutions and public institutions that jumped on the digital asset bandwagon just over the last few months. In mid-December 2020, UK-based asset manager Ruffer announced that it had accumulated £550 million worth of Bitcoin in a cumulative investment since November, allocating 2.7% of the company's portfolio to Bitcoin. What this means to investors like yourself is that things are changing, and it's not what it used to be with cryptocurrency investments, because more people are now learning about this high-risk, high-reward investment. The record-breaking prices of Bitcoin also paved the way for a rise in prices of Ether and other altcoins, which is good for the entire industry. There are so many positive aspects to such institutional adoption of cryptocurrencies. Bitcoin is considered a potential hedge against global economic instability. When we look at the short-term effects of such adoptions, prices can hit record highs when the news pops up that a large company invested in Bitcoin. This happens because more investors who were initially against cryptocurrencies also show interest in it right now. The other thing to look at is the long-term effect, where the supply of Bitcoin is fixed at 21 million, and this means that only 21 million coins can be mined in total, out of which 18 million are already mined. So when large companies invest in Bitcoin, there is a digital scarcity of the coins when they decide to hold, which will drive the prices up. 2021 has seen Bitcoin prices hit record highs, also due to these investments, with several finance-based tech companies accepting cryptocurrency payments. Then we have Elon Musk, who had been extremely positive about Bitcoin, so much so that his electric car company Tesla invested $1.5 billion in Bitcoin, and this was done to diversify and maximize the company's return on investment. The company also announced that they would be accepting Bitcoin payments for their cars. But later, this decision had to be changed because the whole mining process of Bitcoin consumes a lot of non-renewable sources of energy, and this is something that goes against the goal of Tesla as a company. But as of now, the company has not sold any of the Bitcoin holdings since this announcement. Then we have a company that focuses on developing business intelligence software by the name Microstrategy that's buying as many Bitcoins as possible. By February of 2021, the company had 71,039 Bitcoins, then purchased another $15 million worth, and now they have more than 90,000 Bitcoins. Then we have Blackrock, which is the world's largest asset manager and is now into cryptocurrencies. In January 2021, it added Bitcoin futures as an investment vehicle for its strategic income opportunities and global allocation fund. Rick Ryder, Chief Investment Officer at Blackrock, said that Bitcoin could become a storehouse of value and take over the position of gold. We also have Goldman Sachs offering investment vehicles for Bitcoin very soon to help private wealth managers hedge against inflation. Reuters reported that Goldman would restart its crypto desk and begin dealing with Bitcoin futures and non-deliverable forwards for clients in March. The bank's chief operating officer, John Waldron, said later in March that client demand is rising for Bitcoin, and a Goldman survey of nearly 300 clients found 40% had exposure to cryptocurrencies. Twitter CEO Jack Dorsey's payments company, by the name Square, bought another 3,318 Bitcoins for $170 million. That took its holdings to more than 8,000, worth upwards of $450 million on the 12th of March. Then we also have Morgan Stanley, that is already offering funds that can facilitate Bitcoin ownership. According to CNBC, Morgan Stanley is set to become the first major American bank to offer its high net worth wealth management clients access to Bitcoin funds. The photo retouching company Meitu, which is hugely popular in China, said it bought about $28.4 million of Ether and $21.6 million of Bitcoin. Then we have the oldest bank in America, the Bank of New York Mellon, that will offer services for financing Bitcoin and other digital assets. This is done so that the institution can leverage the existing financial network employed for handling traditional holds, which is huge for cryptocurrencies as new mainstream financial assets. We also have PayPal, Visa, and MasterCard, with the integration of cryptocurrencies with their existing payment solution. PayPal has more than 390 million active users, and in doing so, they can make Bitcoin payment more accessible than it was previously. PayPal also has 30 million merchants that can accept payments in cryptocurrencies. Visa is also processing crypto-based payments without the need to convert cryptocurrency to fiat currency. Earlier, we spoke about Ruffer Investment Management. UK-based Ruffer Investment Management has managed to quickly turn its recent Bitcoin investment into a $750 million profit. Ruffer's allocation fetched $27.3 billion in assets, which they claimed would work as a hedge. It effectively secured 6,500 clients against the risks involved in a fragile digital economy. Another important bit of news is the Grayscale Bitcoin Trust, which is one of the most significant Bitcoin funds out there that became an SEC reporting company in 2020. The share of the company is excellent for people who want to invest in Bitcoin without actually holding the coin. So right now, it looks like Bitcoin investments jumped from being extremely undesirable to something that is undeniable. But what brings the attention of these institutions to cryptocurrency? Well, institutions now understand the utility of Bitcoin as a store of value and a hedge against inflation, which is why they're always buying the dip. Bitcoin is also now considered a safe haven asset just like gold. When you look at 2020, crypto outperformed every other asset out there, which can be the reason why institutional adoption is now on the rise. But towards the end of May, just after the Bitcoin crash, institutional investors showed a bearish sentiment towards cryptocurrencies. This could also be because of countries banning cryptocurrency mining or cryptocurrencies altogether due to power outages, and Tesla's decision to suspend Bitcoin payments also contributed to this bearish sentiment. But with things like increasing institutional adoption in general combined with the growth in emerging global markets and investment from very young investors, all these tell us that the future is bright for cryptocurrencies. But when is that future? That is something we need to wait and see. To sum things up, the current trend in investments by these financial institutions and other companies could mean that the role of cryptocurrencies is about to change in our present economy. More investors are also bullish about the long-term future of the cryptocurrencies because of these institutional adoptions of Bitcoin and altcoins, because cryptocurrencies are now the preferred instrument of account and also a store of value. Right now, we can confidently say that the cryptocurrency market is here to stay, making progress at a faster pace than we anticipated. Maybe in the near future, we can find more and more institutions investing in cryptocurrencies. But despite all the positive news, you also need to keep in mind that anything can happen in the cryptocurrency market, making them highly volatile assets. And by now, we've all seen enough evidence of the extreme volatility. The present rate of adoption gives us an insight into what the future is going to look like for cryptocurrencies and the future of payments. The days when we see a stable and sustained market for cryptocurrencies is very near, but right now the market's very young and there's a lot to improve. You also need to keep in mind that we still have financial experts who hate Bitcoin, probably because these cryptocurrencies don't work like traditional stock markets, and these assets go against conventional economics that we're all used to. But when more and more companies and institutions invest and utilize these crypto assets, accepting the change will be inevitable. With that, we've come to the end of the video. What do you think about the institutional adoption of cryptocurrencies? Do let us know in the comment section below. In case you're not subscribed to the channel, now is the right time to do it, as we have more content like this for you coming up. Also, don't forget to press the bell icon to get notified about our future uploads. Drop a like for the video if you are optimistic about cryptocurrency. Catch you all in the next video.